Tesla stock split 3-for-1 is the best thing that could happen to Tesla right now. It was a surprise at first, but then it totally made sense for many. Cathie Wood and some other Tesla investors wanted to see this a long time ago, and here we have it. Tesla has just announced some of its business plans that will kick off later in the year. According to a proxy statement filed, Tesla will seek shareholders to accept a 3-for-1 stock split at their August annual meeting. It turns out this can change the company's future and help out during tough times that are coming soon, according to Elon Musk's beliefs. So, how and what benefits will this bring to Tesla? First, the stock is already looking good. Upon the announcement, it rose 2.2% in post-market trading. At Tesla's annual meeting on the 4th of August, shareholders will vote on the plan. Tesla said in its statement that the proposed stock split would help the company to reset the market price of its common stock, giving its workers greater choice in managing their ownership, all of which, in Tesla's opinion, would help maximize shareholder value. Furthermore, since retail investors have shown a strong desire to participate in the company, the shares split will make the common stock more accessible to all retail shareholders. Tesla said the 3-for-1 stock split will be implemented via a special dividend paid to shareholders. This is the company's second stock split in less than 2 years. In 2020, the company implemented a 5-for-1 stock split, resulting in a 60% increase in share price from the day of the announcement to the execution date. The electric vehicle manufacturer evidently hopes it would happen again, since having the shares trade at a lower price may well attract its large fan base of private investors. And if the prices of the share do go up for this reason, then the news will come as a breath of fresh air for Tesla. In a cryptic tweet, the electric vehicle manufacturer initially revealed its stock split plans on the 28th of March. The shareholder meeting will be conducted remotely and in Austin, Texas, where the company is headquartered, on the 4th of August. However, anybody expecting a repeat of 2020's performance should moderate their expectations, since the market situation may not be as favorable to this approach as it once was. Alphabet and Amazon announced 20-for-1 stock splits in February and March, respectively. Both shares have fallen around 20% since the announcements. To achieve what it's planning to do, Tesla proposes increasing the number of authorized shares of Tesla common stock from 2 billion to 6 billion. The principal goal of the authorized shares amendment is to permit a 3-for-1 stock dividend split of our common shares. The stock split: we have 1,036,390,569 shares of common stock outstanding as of the 6th of June 2022, and the current number of authorized shares of our common stock is 2 million, which is inadequate to implement the stock split. Our board expects to adopt the stock split subject to shareholder approval of the authorized shares amendment. Moreover, the gradual decline in Tesla shares over the last several months implies that its large and devoted retail trading base may not be enough to offset the broader deterioration in investor attitude towards the business, especially with a low-risk appetite. The firm has recently lost the top slot at the flagship fund of one of its most enthusiastic supporters, Cathie Wood, to Zoom video communications. According to the filing, one of the critical reasons for the stock split will be provision of the workers who have recently joined the company with the same advantages as those who were there at the time of the last stock split made in August of 2020. Unlike other manufacturers, we provide every employee with the opportunity to get equity. Our stock price increased by 43.5% after our split from August 2020 to June 6, 2022. While this value appreciation has resulted in enormous benefits for our workers over the years, we want to ensure that all employees, regardless of when they join, have access to the same benefits. A stock split breaks existing shares into smaller parts, making them more accessible. This increases the overall number of shares while decreasing the stock price. In other words, examine the 3-to-1 stock split about a $300 stock. On the day of the stock split, if you possessed one share of the corporation, that one $300 share would be divided into 3 $100 shares. Options are impacted in the same manner as shares are, providing they expire after the split date. For example, if you have a $900 strike call and a 3-to-1 split occurs, you will have 3 $300 strike calls. This situation allows you a greater leeway in deciding whether to exercise or sell. A stock split may be issued by a firm for various strategic reasons. Typically, a company expects significant growth and wants to make shares affordable to ordinary investors. Employees who earn stock-based remuneration, such as those at Tesla, will also have greater access to the shares. Since Tesla share prices soared beyond $1,000 per share after the Hertz electric car agreement in October, talk of a split has been rampant. Some speculated that an announcement might be made on the 9th of December. Still, a buzz went down after a disappointing product roadmap in January and a more significant sell-off in growth companies chilled demand for Tesla shares. However, a broader risk appetite has now returned dramatically, boosting Tesla's optimism. The stock has been on the run in recent weeks, surging from a low of $766 to closing over $1,000 on Friday. A stock split decreases the cost of purchasing a single share, but not the market value. Thus, it just becomes cosmetically cheaper. One significant rationale for such modifications is to decrease the entry point for private shareholders, since the nominal price is irrelevant to professional money managers. Some financial experts have been calling for a stock split for months, saying it would boost share demand. Well-managed firms often did splits with management intended to show confidence in the future and aid individual investors. Small investors have flocked to Tesla in droves, with tens of thousands creating minor accounts during lockdown in the pandemic year of 2020 solely to purchase the EV manufacturer's shares. In theory, a stock split would not impact the stock price. Nothing changes. However, according to Reuters, data from Bank of America suggests that firms that split their shares do around 60% better than other companies in the 12 months after a split. However, this might be an indirect association and could be partly or entirely connected to the company's development and other variables. Stock splits often indicate that the firm is expanding and confident. Those who trade stocks and options, on the other hand, usually take advantage of the split situation for trading, which may cause significant volatility in the markets before and after the split. In other news, the proxy filing also indicated an anticipated change to the board of directors, which would cut the total number of members from 8 to 7, with incumbent member Larry Ellison opting not to run for re-election. In June 2022, Lawrence J. Ellison, a Class 3 director, agreed with the Nominating and Corporate Governance Committee and the board that he would not seek re-election to the board when his current term expires at the 2022 annual meeting. According to the business, Larry Ellison will also step down from the board of directors. Ellison, the world's 10th wealthiest person, is worth over $87 billion. He gained a fortune as a co-founder of the software business Oracle Corp, and he initially joined Tesla's board in December of 2018. Bloomberg statistics show that Ellison owned 1.5% of the electric car manufacturer as of the 30th of June 2021. According to the report, CEO Elon Musk now owns 23.5% of the firm after his latest share transactions, up from 21.2% in February. Vanguard and BlackRock are the company's other two biggest owners, with 6% and 5.1% stakes respectively. Following a significant increase in the value of their stock, companies usually announce stock splits to make the price per share more reasonable. A split not only makes the stock more inexpensive to investors, but also helps a business be included in the Dow Jones Industrial Average, which increases a stock's value since many investment companies watch the index. A stock split increases trading by by making the stock more accessible to smaller individual investors. However, a rising number of brokers are now providing individual investors with the opportunity to acquire fractional shares of high-priced equities such as Tesla. Tesla's annual meeting of stockholders will be held in Austin, Texas on the 4th of August 2022 at 4:30 p.m. Central Time. This is one of the most anticipated meetings as the members of the press cannot wait to capture the moment when the final decision will be made. Let us know if you are for or against the split, considering the upcoming financial recession, which is expected by many. Thanks for watching and see you in the next videos.